Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst, part of MarketSmith India team. Before we go ahead into this podcast, I'd like to state the disclaimer. Whatever stocks we discuss in this presentation are intended only for educational purpose, should not be taken as an investment advice. Let's look into Nifty's daily chart to get an overview of how the markets are placed at the current moment and how are we looking at the market from O'Neill perspective. As we all know, recently, 2 days back, we had a budget session and Nifty was highly volatile on that particular session. Nifty reacted to various announcements made by the finance minister. So it was more of a volatile week because for the week coming to budget also, there were huge expectations from the government and market analysts were expecting various announcements in various sectors. So that is one reason for high volatility in the last 4 to 5 trading sessions. It will soon ease, that is volatility will come down. India VIX will definitely cool off from here on because the major event is behind us. Going forward, it's always better to look at price volume action rather than going by various news or any analysis done by other analysts on the media. Because price action will definitely give a more clear picture than other analysis. So, if you look at Nifty's price action recently in the last couple of sessions, Nifty closed in the red territory, but on closing basis, it tried to bear its losses and it tried to close in the green. Some of the major heavyweights and which are in the Nifty Mid 50 index are falling because of specific news related to those group stocks. So that is also weighing down the Nifty. If you look at Sensex, slightly outperforming compared to Nifty because Nifty has those stocks in the index. Talking about O'Neill perspective, we are in a downtrend and on budget session, Nifty made a new low that is around 70,350 level. That is the level which will be tracked going forward, and if the Nifty establishes a bottom and stays above that level for the next two sessions, today and in the next session, we'll be changing the market status to rally attempt. Yesterday, Nifty closed in the red. However, on the if you look at the trading range, it closed in the upper half of the trading range. That is the reason we have considered it as a day one of attempted rally. If you see another couple of sessions where Nifty doesn't reach its correction low, we'll be changing the market status to rally attempt. From there, we'll be looking for a follow-through date to change the market status to confirmed uptrend. That is on the O'Neill perspective. And on moving averages front, the Nifty is trading below its key moving averages, 50 and 100 DMAs, which are historically very good levels to track for the index. It is trading above its 200 DMA. The only support the index has is at its 200 DMA. If that level is also tested, then definitely more selling or pressure will be seen in the markets. Apart from budget, stocks for the December quarter have been reporting their earnings. Some of the companies which have reported their numbers yesterday are Karnataka Bank, which has reported an NIA, that is net interest income growth of 34% year-on-year basis to 830 crores. On the bottom line front, PAT increased more than 100% to 300 crores. One more aspect to look into in any banking stock is the asset quality, whether the asset quality is improving or declining. For most of the companies, PSU banks and private banks, asset quality has been improving and companies are able to generate returns from the bad loans as well. For talking about Karnataka Bank, gross NPS improved 8 BPS sequentially to 3.28%, whereas net NPS improved 6 BPS to 1.66%. Still, the asset quality is slightly not so good when compared to banks such as HDFC, ICICI, which have very stringent asset quality and their underwriting is very stringent there. So if the PSU banks able to make up for the asset quality front, then definitely we'll see more action happening in the PSU stocks. Thomas Cook reported a very good growth in its revenue, around 105% year-on-year basis to 1,500 crores. EBITDA margin expanded more than 250 bps, that is 2.7% to 4.2%. Again, a very good improvement on both revenue front and on the margins front as well. Two major banks, that is Bank of England, upon their meeting regarding the monetary policy, they have increased interest rates by 50 bps to 4%. And the bank is also hinting that more hikes will be coming soon if the inflation doesn't ease. Recently, US Fed has also hiked interest rates by 25 bps, and they have also signaled that inflation should be in the lower range. However, globally, inflation has been trading higher, and in India and in Europe and in American countries also, inflation has been at the higher end. So most of the central banks are stepping in and increasing the interest rates. But the only problem with increasing interest rates is the growth will get hampered because of rising interest rates. The cost of funds for companies or individuals will be higher. So definitely spending will come down because of higher interest rates. That is a drawback of higher interest rates. But it's a two-sided problem. So what banks, government should take a decision to prioritize on one thing. Currently, most of the governments are prioritizing on inflation because higher inflation will definitely lead to more economic distortion than the higher growth, higher interest rates. Some of the companies which will be reporting numbers today are ITC, major FMCG company will be reporting their numbers, and SBI also from the banking space will be reporting their numbers today. So these are two major stocks which have good weightage and which will be tracked by most of the analysts. Definitely will be under radar in the today's trading session. Other leading companies are Divis Labs, Marico, Indigo, Earth Industries, Bank of Baroda, JK Tire are some of the other companies which will be reporting their numbers during the trading session or after hours today. Global market is mixed yesterday. Nasdaq closed more than 3.3% because of Meta surging 23% yesterday. That is, Facebook company has closed more than 23% higher. So Nasdaq has a good weightage by the tech stocks. That is the reason Nasdaq closed more than 3.3% higher. On the Asian stock spread, Shanghai is trading lower 1.3%, whereas Kospi and Nikkei are trading with a flat to positive bias. SGX Nifty is indicating a positive opening for the Indian market. Yesterday, Nifty closed around 70,600 level. 100-point higher opening might be expected on the Nifty front. But what we would like to see is the volatility coming down, and Nifty staying in the positive territory throughout the session will definitely give a positive sign for the longs going forward for the next week as well. Some of the stocks of interest we have put are Ultratech Cement, which has been under radar during the budget announcements, leading company involved in manufacturing for cement. So any push related to infrastructure will definitely be will give push to the stocks like Ultratech as well. Currently, stock has been forming a long, complete handle-based pattern, and it is trading very close to its pivot. It's about to break out from the pivot as well. The volume has also been on the higher side in the right side of pivot formation. Again, positive sign. Fundamentally, it's a very good company. There is no doubt about it. The company has proven about its fundamental character, but technically, the stock is a good breakout and market structure improves. Definitely a good contender for addition. Currently, we are not advising any additions to model portfolio because the market structure is not constructive for additions. However, if you have any stock, if you have this stock in your portfolio, take it. Definitely you can consider holding it, and depending on the buy price, you can keep stop loss levels for a benefit of everyone, if you track the 50 DMA, which is a red line here, has a very good support for the stock. So if the stock closes below that 50 DMA, a couple of points below that level, then you can exit. Until then, you can continue to hold it. Other stock which I wanted to put is ITC. It is coming up with their December quarter results today, and the stock has also been under radar during the budget session and yesterday as well. It has broken out from its stage 2 cup-based pattern. On the budget day, it was highly volatile because of the announcements made by the finance minister. Within a 5-minute gap, it has fallen 5% and it has recovered everything. So that was the peak volatility which was seen in the ITC stock. Yesterday, good follow-up buying was seen in the stock. Volume was also on the higher side. A clean breakout happened on this particular stock. A very good. It is standing very good on the one perspective, and technically also it has given very good signal for addition. Only concern is the market structure is not so constructive. That is the reason we are not advising for additions. However, if you have any this stock in your long-term portfolio, definitely you can continue to hold it, and also please be watchful for the results which will be declared by the company today. So again, it will come under radar in the today's trading session and Monday as well. So if you have this stock in your portfolio, please be watchful for this stock. Thanks for joining today's people. Have a good